So, ladies and gentlemen, thank you so much for your time and the effort to join the session. Feel free to join the session and ask your question, anything concerning the bonds and treasury bills, and especially the infrastructure bonds. With us here, we have Ian and Brian from Equity Investment Bank. They will introduce themselves and they will take us through the session. I hope it will be very fruitful for each one of us. There are some people who already ventured in the bonds, others need some more information to understand exactly how to go about it, and this is the moment. So just pay attention on the session, and after we have a question and answer session at the end of the session. So I welcome Ian to introduce himself and introduce Brian and take us through the session, please. Karibu, Ian.
Thank you very much, John. As introduced, my name is Ian Wachie. I work at Equity Investment Bank, which is a subsidiary for Equity Bank or Equity Group, with our main mandate is to focus on investment alternatives for our clients. And now I head the diaspora market desk. So with me is my colleague, Brian. I'll allow him to introduce himself also.
Okay, thank you, Ian. Good evening, everyone. Thank you for inviting us here. My name is Brian Bundi. I work with Ian. That's under Equity Investment Bank, where you mentioned our mandate. So we'll be here to talk today about investment options. We also are hoping that our colleagues from Diaspora Banking will join as well. But before joining Equity Investment Bank, I was at Diaspora Banking, so I'll take any questions that you might have in regards to accounts. So I'll double up on that side, and I'll also mention a little bit about what the bank can offer in terms of banking while you're there after Ian is done with the main presentation. So I really look forward to the engagement, and thank you, John, for having us here. Thank you, Ian.
Appreciated. So I'll jump straight into it. One, the main focus for us is wealth management. So that's our core mandate or our core job description. So us, we are looking at providing investment solutions. And this was brought about by a few things. One, there's been a need, especially from our diaspora brothers and sisters, to want to invest back home. And now they've been having challenges, and I'm sure one way or another people have invested in real estate, because real estate is the one investment asset which people know most about, and that's what they've been focused on. Now, for us, we realize there are other alternative investment options for our clients or for now Equity Bank customers, but also focusing on other customers who are not necessarily banked by Equity, and try and give them that whole holistic investment alternative. Now, based off that, now there are a few things when people come to invest. So the one thing which we like is just to present a few things. Whenever someone is getting into an investment alternative, we like for them to have a clear analysis of a few pointers. In this case, what is your risk appetite? We know there are other people who can easily take huge risks, and there are other people who do not want to take any risks at all. But all of us know all types of investments have some level of risks involved. It only varies with the degree of the risk with which you are interacting with. And hopefully now you find something which is particularly suited to your appetite. Another thing for investors, they usually look at tax preference. And I'm sure tax is a very, very crucial and critical thing, especially in Kenya. And I'm sure people in the diaspora have been seeing what's been happening in the news, matters taxation in our country. So we always see these sort of things. And now, majorly, whenever we are having taxation on investments, especially on financial investments or financial assets, some investments have some level of taxation involved, which they call the withholding tax. So now we find for most of the time in investments, we find the longer term investments tend to have a lower tax implication, and their shorter term investments tend to have a higher tax implication. And then now we have also other investments which are exempt from tax. So we'll be talking about that too. Another thing is time horizon. One, we usually have now for our investment options, most of the time they range anywhere between 91 days all the way to 25 years. So for you as an investor, it's very, very important for you to understand what is your investment timeline that you're willing to place your capital, in this case, patient capital, for what period of time. So that's a critical thing to look at when you're looking at investments. And the last thing now is return. What are you getting out of your investment? So return is a very, very critical thing because it is the one thing which will guide how you look at that investment and how you can plan on matching that investment to your other obligations, meeting your day-to-day obligations or your periodic obligations. So with that kind of a situation, now for us at Equity Investment Banking, these are the solutions we provide. We help our clients invest in treasury bills, in treasury bonds, in euro bonds, and also in equities. So for treasury bills, they are debt obligations which are issued by the government through central bank to the public for investment. And they are short-term in the sense that they offer 3 months, 6 months, and 1 year periods. So a 3-month treasury bill is called a 91-day bill. A 6-month treasury bill is called a 182-day bill, and a 1-year treasury bill is called a 364-day bill. Treasury bills are issued at an auction, and now the investor bids. And then once they bid and it's accepted, then they can do the investment. So for you, you get your interest up front, and your investment amount is paid upon maturity of that period. For us, when it comes to treasury bills, we usually advise our clients, if you're looking at that, it's preferable to look at a 1-year bill as compared to a 3-month or a 6-month bill. The main reason is if you find a 3-month treasury bill giving you 10% per annum, but you're only taking it for 3 months. So it will be 10%, but they'll have to do again 3/12. So it will be a quarter. So essentially, your net return will be, if you do 3/12 times 10%, I believe it gives you 2.5. So essentially, you're getting a net return of 2.5%. And if now you're getting now, let's say, for example, 11% for 6 months, now, if you do that, then you still have to do 6 months over 12 months because the interest rates are per annum. But your tenure, you're taking it for half the period, for the 6 months. So now you find now that situation, essentially, you're looking at a net of 5.5%. So now, but if you say a 1-year treasury bill giving 11%, then because you've invested for the whole 1 year, that's a whole 11%. So that makes more sense. Now, alternatively, on the banking side, my colleague Ike will talk about fixed deposits, which are in line with treasury bills on the short-term investments. So that's another alternative which we'll have a chance to look at and just do the whole comparison and see your preference. Another solution which we provide is treasury bonds. And today's discussion will be majorly focused on treasury bonds. Now, treasury bonds happen to be medium to long-term investments, which now you have an annual interest amount, and then it's paid to you as an investor semi-annually, giving you that whole periodic liquidity for the entire tenure of the bond. So on the treasury bonds bit, I'll talk a lot more about it. And also we provide Eurobonds. So Eurobonds are also medium to long-term bonds, but they are issued in foreign currency. So in this case, now when we call them Eurobonds, they're not specifically bonds issued in Europe or to Europe, they're issued to the international market. But essentially they're issued in foreign currency, and someone who's looking to invest in that can also invest in that, especially for clients who are looking to hedge against foreign currency risk or foreign exchange risks because of the whole fluctuation as we have been seeing in the recent past, and especially people in the diaspora and sending money home, we've been experiencing that whole forex variation. The other solution which we provide our clients with is equities. So equities, another name for equities is shares. So if an investor wants to delve into shares, we also help them with one, opening the account, and two, also offering advisory services, and three, executing on the instructions of investing in shares. So we also offer all of that. And I know a lot of people have invested in shares in one or the other, and then now they usually say it's not beneficial to them, but we like to give advisory and guide clients, especially when investing in shares, how best to take advantage of it. Because one thing about shares is it is advisable for someone to be a long-term investor. And the one principle the people who have invested in shares heavily, they say is, do not invest in a company which you're not willing to hold for the next 5 to 10 years. That's the simple principle about shares, because you make money over a long period of time. Over the period of time, that's when now you can optimize on your returns on equities. So if I may go further along, that's our approach. We have the initial engagement, the way we're having now in terms of introductory conversations. Then now we provide recommendations based on your financial goals and your horizons and your risk appetite. And then now the other thing is now we act on it, or we do the whole implementation. And then from time to time, we usually have the review. Is this product in line with the expectations? And then how best do you adjust to it? So with that now, again, as I said, I'll talk about bonds. So bonds are debt. It's a debt security issued by government to the public for investment. And like any debt, there's usually an interest rate. So in this case, when you say a debt, the same way for you as a customer, you'd go to the bank to borrow. Now, the government through central bank goes to the public to borrow to meet its budgetary obligations or to meet its projects. There are a couple of projects maybe they want to execute and they need financing, and now that's how they also have access to funding. Now, when they are coming to borrow, there's an interest rate which is attached to it because it is a loan. And that means there's an expected interest amount, and that interest rate is an annual interest rate. So that means you have an annual interest amount which you will earn, and that annual interest amount is split into two and is paid out to you semi-annually. That means after every 6 months, there is money which is paid to your bank account, okay, for the entire tenure of the bond. So we also understand bonds usually have tenures anywhere between 2 years all the way to 25 years. So you can find there's a 2-year bond, a 3-year bond, a 5-year bond, a 9-year bond, an 11-year bond, a 15-year bond, an 18-year bond, a 20, and a 25-year bond. So there are those varying tenures, and you will be paid depending on the bond which you're invested in. You'll be paid interest semi-annually for the entire tenure of the bond. So now that's one principle. Also, we realize for you as an investor, you can enter and exit the bond investment at any particular time at the prevailing market price. There's just, if I may ask, there's someone who's unmuted, please. On your end, you can just mute to avoid the background noise. Thank you. So, as I was saying, you can enter and exit the bond investment at any particular time at the prevailing price. So we understand bonds have prices, and how bonds are priced in units. So 1 unit of a bond is made up of 100 shillings. Okay, so that's where you see on that section, the point number 2, it's price per 100. So the price, the 1 unit of a bond is made up of 100 shillings, and that's an international standardization way of pricing bonds. So even there in France, I believe you'll find, based on your currency, 100 francs will be 1 unit of a bond. In the US, $100 makes up 1 unit of a bond. And even in the UK, 100 pounds makes up 1 unit of a gilt. In the UK, they call their bonds gilts. So 100 pounds will make up 1 unit of a gilt. So that's the international standardization way in which people price bonds in units. So, for example, if you are investing 1 million shillings, the first principle is to understand how many units are in 1 million shillings. So if 1 unit of a bond is made up of 100 shillings, how about 1 million shillings? So when you do that computation, you'll do 1 million divided by 100. And for those people who can do quick math, or if you have a calculator you can do, if you do 1 million divided by 100, it's giving you 10,000. So that means a bond with a value of 1 million shillings has 10,000 units. And you can continuously do that computation over time. Okay, so what now, when it comes to bond investments, what people call the principal investment is what we call the face value. So the face value or the principal is one and the same thing. So now for you as an investor, you realize now that the number of units dictates the cost of the bond. Okay, so the first thing is, when you want to invest in a bond, we will go to the market to confirm the market price of the bond. Remember, I said bonds have prices. And now market, like any market, be it for market for land, be it a market for vegetables, be it a market for real estate, be it a market for bonds, for shares. One thing, the price of those assets in those markets are determined by demand and supply. So demand drives price. So the higher the demand, the higher the price. And the lower the demand, the lower the price. So that's how price is determined in any market. Be it market ya nyanya, market ya chakula, market ya property, the same principles apply. So if in this case, remember the calculation which you're doing about 10,000 units which you're investing in, when you go to the market, we confirm now where is the price for that particular bond. So for example, if we find the price of a bond in the market is 103 shillings. So that means the cost of 1 unit of a bond is 103 shillings. And since we wanted to invest 10,000 bond units, so it will be the number of units you want to invest in times the price per unit. Okay, so when you do that, now you find the cost of the bond is 1,030,000. That is the cost of the bond as determined in the market. And the same principle usually applies for you as an investor when you come and you want to sell the bond before maturity. We encourage clients to hold onto bonds long term, though for one reason or another you may want to come and exit the bond investment. So we'll still use the same principle. We will go to the market and confirm the market price, and then we'll determine the number of units you want to sell at the market price, and that will be your return. But remember, even when you talk about price, there's a difference between price and return, or the interest rate. The interest rate for bonds never changes. So for example, currently there's a bond which was issued by CBK last week, which was giving a return of 15.8% per annum for 7 years. So that means for those 7 years, that specific bond will be paying 15% per annum. There have been other bonds which have been issued previously, and they are giving different interest rates. And those ones are fixed for those particular bonds for the entire tenure or for the entire period of that bond. So just to remember, interest rate is fixed for the bond, and then the payment months. Remember when I said bonds, the interest on bonds is paid out semi-annually. For this specific bond, it will be every December and June for the next 7 years. So that is fixed. So now you understand bonds and bills are called fixed income for that reason, because the terms and conditions for that specific bond are fixed. The only thing which fluctuates is price. And remember, price is only affects you as an investor when you're buying the bond and when you decide to sell the bond before maturity. As long as you're in the bond investment, you are not fully worried or concerned about price. It may move up or down, but it does not affect you because you remember you're waiting to be paid your interest, or now in investment terms is called coupon. So when you hear someone say coupon amount, they're just saying the interest amount you earn on your investment. The coupon rate is the interest rate. So these big words, we are demystifying them today. So they shouldn't be too worrisome for you. So when you hear someone say fixed income, or now, especially in international markets or international news, you hear them saying FIs. So they're just saying fixed income, or they're referring to bonds mostly. So just now, with that kind of a situation, how you can invest is, first of all, you're required to have a CBK CDS account. And the CBK CDS account is opened at CBK, as per the name. How we facilitate that is, depending on now the customer wants to invest, we'll send them the required documentation, and then they can provide us with their Kenyan ID or Kenyan passport, but the Kenyan passport should be valid, a KRA PIN, a photo. And then now for us, we will proceed with the whole account opening process. We as investment banking are open to people who hold accounts at Equity Bank, as well as people who hold accounts outside Equity Bank. So if you happen to be a bank account holder outside Equity Bank, would still, the additional requirement would be to provide us with a certified bank statement, and then we can still facilitate the opening of the CBK CDS account. However, we'd prefer if everything is within the whole equity ecosystem, from the account standpoint to the investment standpoint, to facilitate everything in-house. So now with that, now we can help you open an account. The process takes about a week. And then once the account is open, we can now facilitate you with the whole investment process. One thing about the investment, the one thing which usually say, the minimum investment is 200,000 Kenyan shillings. However, because this investment you're looking at how you can optimize on returns, we usually advise clients it's better, or it's best to try and invest more than the bare minimum. Because at the end of the day, you are looking at optimizing your estate or trying to optimize your wealth or grow your wealth. So that's the thing which we encourage our clients to try and invest a lot more. Now, the minimum is 200,000. You can still invest in multiples of 50,000. This means 250, 550, 650. So you can still invest in multiples of 50,000 over and above the minimum investment. Another thing to understand, we encourage our clients, when they're investing in bonds, to have a similar outlook as to an investor who's looking to invest in real estate. Reason being, one, when you're investing in real estate, you're not a short-term investor. You always have either a 3 to 5 year minimum timeline when you're holding on to that piece of property. Unless by any chance you have insider information on a probable increased valuation of a piece of real estate that now would determine, okay, you want to you want to now sell it at a short over a short period of time. But most of the time, even if it's for speculation, you don't invest in bonds short term. So that's how we like to advise our clients: hold on to the bonds investment for at least a minimum of 2 years. So that's my guidance when it comes to investing in bonds. And how we encourage our customers is try and look at this investment the same we look at trying to facilitate or take care of your future. Because you remember, most of the time our brothers and sisters in the diaspora would want to invest back home, but they're having difficulties because you have to go through a brother, a friend, a family member, and then we all know how that becomes a difficulty when you're doing the investment process. Some have been swindled, and there's no comfort. So our guidance is it makes sense to invest in this space because, one, it is more or less, you don't have to depend on a physical asset. So it's a financial asset. Now, number two, remember, you're investing with the government through central bank. So now everything you can do it, you can have your investments here, you can grow your wealth here, because the bit of it is you can invest in multiple bonds. Because remember, different bonds pay different months. So you can start building your own portfolio. And especially now, a portfolio in which now you can have a bond like this one, which is paying you every June and December. Then you can buy another bond which is paying you every January and July, February and August, March and September, April and October, May and November. So now, once you start having multiple bonds, you're creating that whole liquidity, and almost on a monthly basis, you'll get to a point where now the interest is just being paid to your bank account. And now you start having, it's as if you're creating your own pension profile to grow your own wealth. And from there, now you can start taking care of other people within your sphere. Because at the end of the day, you'd like to come home and enjoy your hard work, which you've been working over a lengthy period of time, or for others, a short period of time. Because at the end of the day, remember, most of us, as much as some might call that home, but we always know your home is back here. So you'd like to secure that, and that's what we're looking at, just how best we can optimize it. So that's it from me. I've forgotten to mention one thing. When it comes to bonds, there are two types of bonds in Kenya. We have what we call a treasury bond, and then we have the infrastructure bond. What I've been explaining to you is the same for the two. The only differentiating factor between those two types of bonds is a treasury bond is subject to withholding tax on the interest earned. So now bonds which have a life or a tenure above 10 years, the withholding tax is 10%. And bonds which have a tenure below 10 years, the withholding tax is 15% on the interest earned per annum. And then the infrastructure bonds, the interest earned is tax-free. And as I mentioned, the particular bond which we have on offer, it has a return of 15.8% per annum, tax-free, which happens to be the highest interest paid of all the bonds in the market. This is the one which has the highest interest. So we know this interest is only being done for a period of time, because these rates will come down at a certain point, and then we'll go back to the previously issued interest rates of the 13% and the 12%. So the encouraging thing is investors should take advantage to have that bond in your portfolio and hold on to it, because once rates start coming down, we'll go back to what we had previously. So with that, I would like to invite my colleague Brian to do a quick highlight, a presentation on the accounts or the banking side of it, and then I'm sure we'll take questions. So thank you very much, and over to you, Ike.
Okay, thank you, Ian. Thank you for that session. It was quite informative for most of us as well. Basically, the purpose of this Zoom meeting today is just to let you know, as much as you reside abroad, you can still have options on how best you can utilize your money, or you can make the most out of your savings, regardless of not residing here. So, John, perhaps you can also make me a co-host so that I can share my screen. I have a short PowerPoint here that I would like to highlight. Basically, I'll just talk about diaspora banking and what the bank can offer you while you're abroad. I believe some of you, if not most of you, are equity customers already. Basically, what that means is that you can open an account while you're still abroad. You don't have to be in the country. You can operate it from there, and you can do your savings while you're still there. You can access your account, and you can also have access to loan facilities while you're still abroad. So basically, I would like to do a little projection. John, I don't know if I'm okay to share now, or you can let me know. Okay, let me try.
Yes, go ahead. Go ahead. Yes, go ahead.
Okay, yeah, I think it's good. Thank you. Let me just look here. I want to share a PowerPoint. Okay.
There's Brian who is still sharing. Maybe you can stop sharing. Okay, now it's okay.
You can see it, huh? So I'll just put this up. And okay, so I hope everyone can see my screen. Let me just put it back on PPT. Okay, just a minute. Okay, so I believe everyone can see my screen now, yeah? John Kim, you can confirm for me?
Yeah, we can see it.
Okay, thank you. So yeah, I'll quickly jump on to accounts. So basically, this is just a quick highlight of our presence so far. We are available in the following 6 countries, that is in Kenya, Uganda, Tanzania, Rwanda, DRC Congo, South Sudan, and we also have a commercial office in Ethiopia. So each of those units have their independent diaspora banking units as well, so to cater for their citizens who reside abroad. So basically, the objective or the purpose of diaspora banking in this case is to support Kenyan citizens residing abroad to be able to bank back home and basically to invest back home, just like Ian was talking about. So I'll quickly rush into the accounts. You can easily open an equity ordinary account, that is a diaspora account, or a business account while you're still abroad. I'll talk about the requirements shortly, but you can basically what this means is you can open an account as an individual or as a registered entity in the country. So the requirements of opening an account are just on the next slide, which I'm sharing now. For you to be able to open an account, it's quite easy. Basically, all you need to provide is a valid Kenyan identification document, be it a Kenyan ID or a valid Kenyan passport, a KRA PIN, which is a mandatory requirement these days from our regulator, which is the central bank. To open an account in Kenya, the moment you need a KRA PIN, regardless if you're a Kenyan or not. So a KRA PIN is another mandatory requirement, a photo, and then something we call a proof of address. Now, because you are opening this account from abroad, you are not able to visit the branch. We usually request a document or rather something to show that you are residing in the country that you are in. That this can be a bank statement from that side, basically a utility bill, maybe like your water bill, your telephone bill, something that has your name and address on it, or a permit, basically something to show that you are in that country. And the good thing is having John Kim over as our referral agent from that side. He can offer guidance on these issues. So I believe he can also share his contacts us after this in case you're not able to reach the bank directly, and he can refer you to someone who will support. So basically, the account opening process is, should you want to open an account, there are some few forms that you fill. One is the account opening form, just highlighted there. A FATCA form might not apply to you guys over there in Europe, that is France, assuming that everyone in this meeting is in Europe right now. FATCA W9 only applies to US persons. It's also a mandatory form, compliance required, that is enforced to the central bank as well. And then we have another form called the email indemnity form, which is the major, or rather it's the most important form of the two. So in this case, if you're in France, you'll only fill the account opening form and the email indemnity form and provide the documents highlighted there. So the most important thing to note is that you can share the account opening documents and the documents and the other identification documents on email and have your account opened. But the major thing to note is that the email indemnity form needs to come to the bank as original. Basically, for the bank to act on your instructions, you need to send over that hard copy form to our office address for the bank now to be able, first of all, to onboard you on online banking, and also now to be able to act on email instructions. Should you have something like now you want to purchase securities like what Ian was talking about, because you need to give the bank instructions to debit your account. So the email indemnity form is a must that we receive it hard copy. So we usually advise clients who want to open an account, as soon as you send over these documents, you can put the original form on the post office or any courier company that you prefer, and once that form is received by the bank, then we'll be able to support accordingly. So for the business accounts, the only thing you need to note is that the business, or rather the entity you'd like to open an account for, needs to be registered locally. That is either as a sole proprietorship, as a partnership, limited company. I know most of us perhaps have companies in Kenya that you do your business with. Chama accounts, this is from self-help groups. SACCO accounts, if you have a group of a Chama, perhaps all of you are residing in France with a few in here, and you would like to open an account, that is also available. We'll just provide you with the specifics, or rather with the requirements for each entity. But the only thing to note is that the entity has to be registered locally. So account currencies available. You can open an account all the way from a Kenya shilling account to a USD account, to a pound account, euro account, and basically all the major currencies. So you can open an account at any willing currency that you would like to open, or rather the currency that you'd like to hold your account, or rather your money in. So the other accounts available, the junior member accounts, you can open an account for someone who's under 18, perhaps, be it your child or someone who's your dependent. You just need, there's also some relevant documentation required. We'll also advise you on that. Investment accounts, Ian just spoke about them, the CDS accounts, and then the fixed deposits. So the fixed deposit basically is a short-term, it's a short-term investment option, or rather way for you to make money, something or other, some interest out of your deposit, because the ordinary equity account has no ledger fees, it has no minimum balance. Basically, it's also free to open, but it does not earn you any interest. So should you like to earn some interest on the short term, if you don't prefer the treasury bills that Ian has talked about, then we have the option of a fixed deposit where you can put your money for 3 months, 6 months, or 12 months on the minimum in-house, and we provide you with a rate that you'll get some interest on. However, that interest again is subject to a 15% withholding tax. Just like Ian was saying, on the short term, you get less returns as what you could have gotten on the long term, or rather medium to long term. But again, it all comes down to your investment horizon as a client, what you tend to prefer, be it short term, be it medium to long term, and the bank gets to support you accordingly. So we are also able to provide payment cards for your account, be it now the debit cards, that is Visa and MasterCards, are only available for Kenya shillings accounts and US dollar accounts. Unfortunately, at the moment, we don't have card service for euro accounts or pound accounts, but should you have a Kenya shilling account or a US dollar account, you can get a Visa or a MasterCard, or whichever you prefer. And Visa and MasterCard being internationally recognized companies, you can use that card anywhere in the world, be it to withdraw money from an ATM back there, be it to pay for a service in a supermarket, in a gas station. Basically, the card can be used anywhere. You have many account funding options while you reside abroad. These are just some of them. Basically, you can fund your account directly from there to here. I know some people usually have an issue with that, asking, how can we put money in our account? You find that now you have to go through the process of sending someone money and someone to now go to the bank to deposit. Well, these days, at least, there are many options, and some of these companies are our partners, including Sendwave or Dremit. I know Western Union, some of you are familiar with this. You can send all those using those options directly to your equity account, and since you will have online banking, you can easily access your funds and you can easily send them out to anywhere you'd like to send them out. So yeah, this is the channels. We do have accounts should you want to open with 1 or 2 more people, depending with your interests. Because we understand some business accounts may have heavy transactions, so we move them to the corporate banking section where, and all these systems have 24-hour support. You can easily call our bank, we'll share the contacts. So the below MasterCard, like I was talking about the cards, you can get the card while you're still abroad. You don't have to come here to get your card. We can ship the card to you basically at a cost. We do have a partnership with DHL, so they usually charge us a bit of a corporate rate. So we are able to process the card for you. A Kenya shilling card is 720 shillings. A USD card is $8.4, and those are the shipping charges for the card and the PIN. We don't send them together because of security purposes. So this is what basically this charge is bared by the client. So we'll just debit your account should you consent to that, should you need a card and should you need it shipped. So basically this is the screenshot, or rather how the online system works. You just register and you sign in. It's quite simple. You are able to check your account. You are able to check your account balance. You are able to send money to an equity account, to any other account in the country. You can buy airtime. You can send money back to an international bank account. You can also send money to mobile wallets, that is M-Pesa and Airtel Money. So all those options are available there, and you can easily pull your own statement. You don't have to worry. So if you have more than one account, you don't need to register very many times. You just need to register once, since all of them are under your probably your Kenyan ID. So you can see just below on this system that I've projected there. So on the right, basically the white interface, that is the Equity Online, which is the web platform that you access on your computer. On the left, which has a dark or rather dark interface, that's the mobile. They are interlinked in such a way that they are now easy to use as compared to the older systems. So you can see these ones basically look alike regardless of if you're using it on the mobile or on the web. We have the bank has managed to interlink the two of them in such a way that the passwords are the same. You are able to set security questions or you're registering so that to ensure that you are in full control. The secret security questions enable you to unblock or rather reset your password should you forget it, instead of reaching out to the bank. So basically, we've tried to make the online system as seamless as possible. And for those ones who have used it so far, can confirm that it's easier to use and it's user friendly. So a quick one, I had mentioned that you can also get financing while you're still abroad. Basically, we do finance you for projects that you'd like to undertake in the country. Like we mentioned, I believe the main reason for us to go abroad, or rather to look for better opportunities, is so that we can either come back and retire back home peacefully, at least enjoy our hard-earned money, or even to do something with the money at the end of it. So the bank can help you realize your goals basically by extending a hand of credit. While you're still abroad, you can get a loan for a residential mortgage. That is, you can get a loan to buy your own residential house back here home, or if you want to build, we can still finance that. Should you want to build a commercial mortgage, basically you want to build something like flats, apartments that for rent, the bank can also support you with that. Should you want to do a plot purchase, that can also be done. There's usually financing available and for those products. So you can see this is just a quick breakdown of how the financing goes. for those who are interested, basically after this, we'll just share the contacts and we can have someone talk to you directly depending with your project. And you can see we can fund bank financing for plot purchase is 70% with a repayment period of 5 to 10 years. Commercial mortgage 80% with a repayment period of 10 years. Residential mortgage 80%, repayment period 10 to 15 years depending with the location and also the amount. Construction loan 70%, 10 years repayment. So all those options are available. And I'll share the link to our website on the chat. I believe all that information that we've talked about is on the website. So I'm going to share the link of the website on the chat where you can now have access to the accounts, the types of accounts, the cards, basically the charges, the loans, and the breakdown of the requirements for each one, for each of the facilities for your further reading. And that's about it for my presentation. We can take any questions. Perhaps as we also tackle questions, the questions can be put on the chat as well. And we can also answer them systematically to ensure at least we've covered everything and every issue that was raised. So thank you very much for your time and for this session. I look forward to interacting with you further and to supporting you in regards to your banking and investment needs. So I'll post my contacts on the chat. I'll also put the link to the website as we take any questions that might have arisen from the first presenter, which was John. Back to you. Thank you very much.
Thank you. Thank you very much, Brian, for the very, very good session, and also Ian. Without much ado, I would invite the participants. If anybody has a question or clarification, please pose your questions directly. You can pose directly or write on the chat, and then it will be answered. Feel free. Yes, Joseph Karanja, please go ahead, unmute and go ahead.
Thank you so much, colleagues, for that great presentation. I have two questions. First, for the opening of the CDS account for non-equity customers, I wanted to know how much you charge in terms of facilitation, and also once someone receives coupon for the investment for the bond, do you charge a certain percentage because you're the one operating the account, or how does it operate? Thank you.
So one for clients or for investors who want to open a CBK CDS account or a CDS account for shares, you're not obligated to hold an equity bank account. We can still help facilitate that even if you have another bank account in Kenya. Or the only additional documentation we'll provide will be the 3-month certified bank statement, and you can facilitate that. We do not charge for helping you open the account, but only during the investment. That's one. And two, when you earn your coupon, we do not charge you. We'll just facilitate the coupon getting to your bank account. You don't charge for that.
So, sorry, just a follow-up. So there's no fee for the facilitation for the coupon from?
No.
Okay, thank you.
No. The only time you incur the charge is when we're executing the transaction, when you're buying the bond, when you're investing in the treasury bill, and then now even when you're buying shares. The only time when you're doing the whole purchase is when we have the whole charges. And just a follow-up, because I know that question will come up. Our charges are usually 0.035% of the cost of the bond.
Good. There's another question from Awur. She's asking, after the bond matures, do you only get the initial money invested back?
Remember I was saying your interest which you earn in a year is paid to you after every 6 months. So if you invest for 7 years, that means you have to get interest paid to you 14 times. So that the 14th payment will be made plus your face value or the principal. That will be paid upon when that particular bond matures.
Okay, I hope it's clear, Awor. There's also another question. Hi, I had an Equitel line, but I lost it 2 weeks ago. Is it possible to renew the line because I was used to doing M-banking? I think this is somebody who lost his equity line. Yeah, please go ahead.
To answer the question of the equity line now, unfortunately, equity lines, we don't have remote support for them. So you find that if you lost it, it's advisable that you reach to the bank to block the line. But then the good thing is you can be onboarded on the channel, that is Equity Mobile or Equity Online. And you find that you will not be able, you will not need to use the Equitel, because if Equitel loses the network while you're outside of the borders and it needs to be reprogrammed, then you have to visit the branch. So it's usually more of a product for local, if you're residing locally, but you can share your contacts with John Kim and you'll forward them to us so that we can have you onboarded on the channel as well. I also saw another question for Equity Mobile. If you're having any challenge, please share your account number or rather your contact details with John Kim. He'll share them with me directly, or you can also send them to me via WhatsApp through my number I've shared, and we'll have you supported on Monday right away to have you onboarded on the channel. So in case you find that it's not working because perhaps the phone number you have in the account is the local one, and maybe once you moved, you change the number, that will be the first step to update your contact details for you to be able to get the OTPs. Also, if the bank has not received the original email indemnity form, then you find that we'll need to receive that one to be able to support you accordingly abroad. But you can share the contact details with John. Please take note so that we can have everyone supported who's having an issue with account access. So Ian, you can take the other two questions I've seen on the chat on the bond, and then we can continue. Thank you.
Ian?
Yes.
Yeah,
so
go ahead.
So yes, that as I was saying, that bond investment is still available. Yes, you can invest at that minimum. The process usually upon receipt of all relevant documents, as earlier highlighted, and submitting them to CBK, the account opening process usually takes an average of 5 working days. We should have this. So examples of maturity periods of CBK infrastructure bonds. Bonds, they depend. You can have a bond, as I said, bonds usually have a period anywhere between 2 years all the way to 25 years. That's the average tenure of bonds. Withholding taxes for different types of bonds. So withholding tax rates for the different types of bonds and T-bills and why they are different. One, essentially for any debt and for anyone who wants to borrow debt, you want to borrow debt for long term. So the way in which investors are encouraged to loan money to CBK through bonds for long term is by giving them now for bonds which have tax implications, is by charging them less taxation for the longer period. 10 years plus, it's 10% withholding tax. Less than 10 years, 15% withholding tax, as well as treasury bills, 15% withholding tax. So that's just an incentive for people to opt for the longer term bonds. And that's the reason why. So the 0.035% fee that applies to bonds. For treasury bills, it's 0.3%. That's to answer Peter Gitau's questions on the chat. The previous one, I believe I had also answered on it, unless there's an additional question.
Yeah, any more questions? Please feel free to answer the question. To ask the question, you can write it on the chat or just ask directly on the forum. how long will be the infrastructure bond? How long will be the infrastructure bond?
So there are different infrastructure bonds. The current one is a 7-year bond. So that's the current bond which is on offer. It's a 7-year bond giving a return of 15.8% per annum. So if you just a question from Awar, if you happen to have a CDS account through Equity Bank, remember, if you happen to have a CDS account through Equity Bank, yes, we can help you with the buying of shares. We can facilitate that process. If you happen to have that CDS account held by another broker, first of all, there are two alternatives. You can opt to open an alternative CDS account with us, or you can instruct your broker to do the whole transfer of your portfolio from that account now to your current one held at Equity Investment Banking.
Yeah, and maybe just to add something on that, one cannot do like several transactions using the same CDS account. You know, like from a different broker, use it with Equity or KCB or another agent. If it's one agent, yes, but if it's different agents, no. That's what I understand, right?
That's very, very correct, because if you happen to have opened the account through another broker, will be considered a third party. So we cannot intervene on that. We'll have to do the whole process of the transfer, or alternatively to open an account, a CDS account through us. Then we can facilitate the investment process.
And this means you can have even several CDS accounts as long as you're dealing with different brokers.
Yes, that's the case. However, we encourage clients now. So just to give you context, if you happen to have open a CDS account with another broker, the process requires that you actually physically fill a certain document. It is a triplicate document. Send it to your broker. Your broker now authorizes the whole transfer of your portfolio from his broker house to our investment banking side. So that's usually the process. So most of the time, if we have that sort of a limitation, we'll advise our clients now, if possible, we can have that settled, or if possible, you can advise them they can liquidate their assets there and just come and start afresh on this other side if they're having that difficulty. Also, to answer War's question, now currently on your CDS account, in terms of access, our development team or our tech team are still trying to develop that that platform so that you won't even be needing our intervention. We'll be doing the whole shares investments by yourself. So that's something which is still being worked on. Once it's been availed, we'll definitely notify you, and you can be doing your shares purchase and sales by yourself through the platform. So that's something which is in the works.
Awar is asking, how do I access my CDS account opened through Equity?
John, I don't know if you had me previously. I was saying, so right now, how you can access it manually, because now we'll still do the manual process as they develop the tech side of it. One, we can request for your CDS statement, and we can still facilitate it to you. You can still see your entire portfolio, and when you want to do the investment, we can still facilitate that for you.
Okay. Any other question? There's somebody asking me, is the minimum investment in a bond at 200,000? Can one investor maybe starting with 100,000 shillings?
For the investments done through Equity Investment Bank, that's the minimum placement for 200,000.
you.
To answer the latest question, CDS stands for Central Depository Securities. So yes, if you happen to have an account at the Equity Bank, all you just need to do is transfer money to that account, and then we can even if you do that, just share with us your contacts or your email address and all. We'll send you the requirements for opening the CDS account. Then once that account has been opened, then you can facilitate the whole investment in shares, or now investment in bonds for the CBK CDS account.
Good. Any other question? Any question, clarification? Yes, there's one there. There was a CBK project to build a digital platform to access debt investment called DAO CDS, if I remember correctly. How would your facilitation be impacted, this platform once it is launched? There's a question from Peter Getao.
Just to give Peter context, the main thing which we're doing here is we're doing advisory, because remember, even if I am talking to you about investing in bonds, the main thing which I'm doing is advisory, because you would still want or prefer to be given guidance when you're getting to this. I am not necessarily selling your product. And with that, that's where relevance comes in, because someone who may still need to understand how the bonds work. With them having this whole facilitation of that platform, we'll wait and see how it works, how it's been incorporated, and then we can see how best we can be helping our clients within that platform.
Yeah, also just to add something about the Equity mobile app, some people have been asking how it works. You know, some people had challenges with it. As Ian said, once your email indemnity form original has been sent to Kenya, you will receive a call from the customer service from Equity just to verify your details and activate your app. It cannot work if it's not yet activated from the customer service side. So once it's activated, you download it and put your password, and you're good to go. You use it. It's very seamless and works out very well. So in case you have any challenge, don't hesitate to reach out to me, and we'll connect you to the diaspora customer service, and you get a call just to activate your app. There's a question from Edward. If in diaspora, is it possible to open as a Kenyan in Kenya if you have all information, including Kenyan phone line and PO box?
I can answer that question. Basically, we are usually, when you're opening an account, I can say this, as a regulated entity, we usually have certain terms and conditions, because we have to be in line with our regulator, that is the central bank. So when it comes to account opening, basically you have two options. If you wish to open an account, you can either open it by presenting yourself and walking into the branch. And if you are opening an account virtually, basically then you need to provide the documentation to show why you are not able to visit the branch. And in this case, this is what you are talking about the requirements of opening the account while you are not in the country. So yeah, you can provide your Kenya number, your PO box, but at the end of the day, as long as you're being supported virtually or rather while across borders, then you'll need to provide an address verification document to support, or rather to show where you're opening the account from. So in this case, if as much as you're entering the information being local, that's okay because it's your preference, but we always advise that you enter information that you're reachable on at any given time. So if you're abroad and you know, yes, you do have a Kenyan number, but you still have a French number perhaps, then we advise on having your current information. So in case you have a request and we want to call you, like John was talking about the app, we can easily reach you on your French number without you having to go through the cost of having to roam on your Kenyan line, having to top up bundles and airtime on your Kenyan line for us to be able to reach you. And again, we understand international calls can be expensive, especially if you are using a line that is not domiciled in that country. But at the end of the day, it's client preference. We do support you as you prefer. But again, in terms of documentation, some documentations are standard. So as long as you are not visiting a branch physically to open an account, then if you're opening it from the diaspora and we are supporting you, we need an address verification document, which can be a utility bill, a driver's license, or a bank statement with your name and address. If you don't have those, perhaps maybe for those clients, perhaps in the Middle East or the non-English speaking countries like yourself, sometimes you might find that you can get perhaps your visa or your permit. I know in Germany, they usually have permits that look like IDs that even have your address. So we can also use that. In France, if you have the same thing, it's still okay. But I know in Europe, the countries are more developed, so you can easily get a utility bill, you can easily get a bank statement, you can easily get all those requirement documents. So yeah, I hope that has answered the question. So in terms of the requirements, that will be it. But we just prefer to have your current information, even for ease of reaching you. If we are calling you, if it's from your French number, the bank is catering for the charges, we find that you just receive the call because we are able to reach you directly. But if you put your Kenyan line and perhaps the bank needs to call you for a request, perhaps you want him to buy into some bonds and we need to call you back for verification, or you want the app activated and we can't reach you on the Kenyan line, then you might be forced also again to introduce the other number if you have it. But if you prefer the Kenyan line, just ensure whenever you have a request and the bank needs to reach you, we are able to get you. So yeah, thank you. I hope that answers the question. Back to you, John. Okay.
Yes, Edward is in US. So Edward, just as Ian and Brian have said, it's better and advisable for you to open using your address in US and your number. It's more practical because we have a diaspora department that is dedicated to handling diaspora affairs. So it's better and more efficient for people outside the country. And it's very easy and seamless to open an account. It's only one form that you send the original. The others you just come, and it's only the indemnity form that you send the original. So it's very easy and practical to open an account while you are in the diaspora. Any other question? We'll be closing shortly, maybe in the next 10 minutes, and we don't want to close anybody who has a question. So please feel free to ask all your questions. You can ask your question directly or just write on the chat. We'll read it. Please note on the same note, I already have the account. Do I need to provide the documents if I need the MasterCard?
To answer on the question of that, now, if you need an ATM card, the only thing you need to do is you just need to fill the card application form and scan it over. On this condition, again, in terms of the documentation, if you need the card shipped to you in France or whichever country you're residing in, perhaps, then we need to have your current address in the account. So if you have already provided that, then it's okay. So if we are assuming all things constant now, we've already received your email indemnity form. Your account bears your foreign indicia, that is your foreign phone number and your foreign address. Then it means you don't need to provide any of those documentation again. You'll only need to fill the card application form. You email it over to us using your indemnified email address. We call you back to confirm the request. You agree to the charges of shipping and processing, and we just ship and process it to you. We don't hand over cards to anyone who's not the account owner. I know that question. I usually get it sometimes. Perhaps you have even a family member in the country who you trust and you left them to pick the card on your behalf. Unfortunately, due to compliance and safety, the bank does not do that. So if you're abroad, you usually have two options. You can either apply for the card to be shipped directly to you, to your house via DHL, or should you be visiting the country, you can visit any branch and have an instant card printed for you. So those are the two options. So we don't also give cards to third parties. I hope I've also answered that question. So basically, any request, because I'll just mention the major requests that the bank gets. Mostly you find that perhaps that is funds transfer request, especially for amounts more than $1 million, especially for high value transactions. You find that you need to fill a funds transfer form if you can't do it on the channel. But these days, you can also do all those transactions. You can do any transaction on the platform, on the online platform, because even if you're doing, we all know the central bank limit is $1 million, but if you're doing more than $1 million on the app or the web, these days it allows you to upload the supporting document instantly, and that transaction is usually gotten by our online banking support, and it is settled in the same day. So for those who prefer to send email instructions, you are aware that as long as you have email indemnity, you can easily send instructions on email. We'll just call you back, and the transaction is processed. So be it an account activation or an account update, those are the steps that we follow. But the most important form is the email indemnity form. As long as we've received that form one time, which is the hard copy, every other request that you have can be done virtually and can be done through email correspondence. Okay, thank you. Back to you, John Kim.
Yes, thank you. Let's see. Yeah, on the chat, you have the Diaspora Support Center number, which is available 24/7, +254 763 026 481. Email is info@equitybank.co.ke. Do you have any other question or clarification before we wind up? Don't want to keep people so much. And another thing just to add is that you can buy as many bonds as you want. You know, every bond is paid on its maturity, on its 6 months, on 6 months after it was bought. So you can buy as many bonds as you can. Seems there's no other question. So allow me to thank everybody for the session. Thank you so much, Ian and Brian, for your time and for your wonderful explanation and taking us through. And everybody who participated from wherever you are, thank you for your time. I believe it was beneficial for you. And don't hesitate to reach out to me or to reach out to Ian or Brian for more support. We'll be having more of these sessions as we move on. Thank you so much also, Noah, for the link and for connecting us. Yeah, there's no more questions. So allow me to close the meeting, and thank you so much. And I wish you all a very, very great evening. Thank you. Asanteni sana.